The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Unfortunately, due to some technical difficulties, we're not going to be able to see the DAX and the FTSE. Our good friend over in the UK has taken the day off. We'll bring those up to date. I'm sure they're up, given the fact that most of these other things are up already today, as we've already talked about. Now, today also is I am going to post a chart. Thank you very much, my friend. I'm going to do it right now. And we will start out, I believe today, we're going to start out with the euro, because that was one of the ones we were watching yesterday. And we'll bring it up to your attention here. Here, we'll bring this up here and let you see it. There you go. And you'll notice here that we went just a little above that 61% retracement yesterday. We got up to 114.70. Now we've broken down to the 114.20 level. And it looks like we could get down below that 114 level without too much trouble. Well, there's always a lot of trouble, but we'll have to, do it one step at a time to see if it's going to work here. I'm going to change the format here a little bit. We get on this program day after day doing the same thing, and it gets a little bit of monotonous for you folks. It's not for me, because I really love these patterns, but we will talk of something a little bit differently. Oh, it was about, oh my goodness, it was about 20 years ago, almost more than that, 25 years ago. My good buddy, Steve Shapiro, got a fax from some guy in Bakersfield, California, to show him what the stock market was going to do for the next day. And he did this for a couple of days, and Steve brought these little thermal faxes into the office and showed me what he was doing. And so they gave me the forecast of what the S&P was going to do for that day, and I watched it. And sure enough, went right down to the time where the market was supposed to turn. And sure enough, the market rallied very, very strongly. Well, I had the guy's number. His name was Dennis Regan, and he lived over in Bakersfield, California, the armpit of California. It's about an hour and a half from San Luis Obispo. And well, it was actually an hour and a half from Pismo Beach, because we were a little bit closer to the turnoff where you go to get there. And I gave him a call, and I told him, I said, look, this was a really nice move that you forecast. And I said, this is when we were trading big handles. In other words, each point in the S&P was $500, and it moved about 4 points. So that was quite a bit, about $2,000. And so I bought it. It was a beautiful Gartley down there, just as the market was forming. And I bought it, and it rallied really strongly, and I made my price objective, and I called him up to thank him, and I was going to send him some, I forget what I was going to do, but his response was so bizarre that I didn't know what to do. He started yelling and screaming in four-letter words, say, "You're the stupidest, dumbest trader. Mother, I've never seen anything as dumb and stupid as you are." And excuse me, I said, "Why do you say that?" He says, "It's going to go up the rest of the day. Why are you getting out of it now? Can't you read a chart? Are you that dumb?" And he slammed the phone down, and that was it. And I said, uh-oh. I said, something's wrong here. And anyway, the market did. It rallied all the way up. It actually rallied about 8 points that day, which was a very big rally. So what I did was I just passed. I didn't do anything for a couple of weeks. And then through Steve, who had kept in contact with him, he said he would like to talk to me. So I called him up, and he said he apologized for being, so rude that day, but, it was such an easy day that, he said even a blind man could have got it right. And I said, well, are these right every day? And he said, no, they're not. And I said, what it's about? He said, it's about artificial intelligence. And I had no idea what artificial intelligence was. So I said, okay. I said, we'll take a look at this, and we'll see if it's any good or not. And he said he charged $5,000 a month in gold. He had to be paid in gold for his service, and I didn't blink an eye. I was shocked, but I didn't blink an eye. And I said, well, let's look at it for a couple of weeks just to see how it works. And so I did. I looked at it for a couple of weeks, and by golly, he had some really amazing turns. Now, they didn't always work, but some of them were really amazing. What I tried to do is to match them up with some of the things that we usually look at, like Fibonacci numbers and patterns and stuff like that. And but that's really what I was trying to do. Well, what I'm going to do now is just give you a little recap of what I've continued to run these to this day. Actually, I've always tried to find them so that I would be able to get a what we call a real edge, where I could do it automatically, do automatic trading, but I was not able to do that. For instance, yesterday, here's what we were looking at in the euro. If you'll bring this up here and let you take a look at this, was the forecast for yesterday in the euro, and as you can see, it did make that high right up around that level. It was within about 20 minutes of when the euro made its high, and of course it had a sideways to downward bias after that, which is in fact what happened. It didn't start the larger break until later in the afternoon, as was expected. So that was the type of thing that that we were doing, and we do these we watch them over Asia, we watch them over Europe, and we watch them over the U.S. So we're watching all three different time frames. Now, you can't trade everything on all different time frames unless you could do it automatically, and it should be done automatically. But unfortunately, the computer power and the brain power necessary from this end here in Tucson, Arizona, is severely limited. So I use it very, very sporadically. I look at certain things like the S&P 500, and I also look at, no, it's not the Ensign map, not even close to it, Marshall. It is really not. Marshall, I need a favor from you. I'll ask you a little bit later, but a very simple favor. I know that you can do this easily, but no, it's not the Ensign map. What the Ensign map is, it's very interesting. We could get a whole topic about this. I should be a whole internet on this, a webinar on this, because it's a very good. Ensign has a program in there that basically tries to depict what's going to happen over the next day. It's based on the principles of the artificial intelligence. Here's the basic background of artificial intelligence, the original formula. Now you can see why it's so much over my head. I wrote a book about this called AI. And it's an interesting book, but what I did was I didn't publish it. When it was published, I sold about 100 copies, and I didn't want to sell anymore because people were asking me questions that I couldn't answer. And I said, well, I better get away. Here was the forecast for the E-mini S&P all through Europe last night. I'll get this up here and take you show you where we are. Now, if you're looking at the S&P for today, now remember, these things don't work all the time, but it's showing that we're going to get a correction here. I know it doesn't look like we are, but it's going to give us a correction. Now, the numbers that I'm looking at are some 2575 to 2580. 2580 should be some pretty good resistance today in that S&P. Now, I don't know if it's going to do it or not, but we'll be able to take a look at it. What we'll do is we've got a break here. I'll share with you what we're looking at in the crude oil, and then we'll get right back to the normal things that we do here at TFNN. 877-927-6648. Thank you very much.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and we're talking a little bit about artificial intelligence. And I was bring up this chart to show you what I'm looking at here in the E-mini S&P on the 15-minute chart. And whoopsie daisy, what's happened here? Let's get this up. Be okay. And here we go. Hold on. Oh, you know what happened? I'm very sorry. I turned the mic up to sneeze, and son of a gun if we didn't turn it down. Now we'll take a look at it here. You'll see here, this is the 15-minute chart over the last 4 hours in the S&P. We're making a little bit of a three-drive pattern up here between 25.76 and 25.78. And that's why I'm saying if it gets above 25.80, it most probably is not working the way that we would have expected. Now, one of the things that we looked at yesterday, this morning, of course, is the, we'll take a look at crude oil. The green line is the forecast that we were looking for. And you can see that it had a pretty good rally. And since we ought to continue on with the crude oil for today, just to see whether it's going to continue what it's supposed to be doing or not, we'll bring it in here so that you folks can take a look at it, and we'll see if it's going to work. Remember, these things only work about 70% of the time, but when they do work, they work pretty well. So let's take a look at some of these things here in real time. Remember, we were looking at that the stock market. We had that beautiful bottom down there in the S&P. It just did everything that we could have possibly asked for. That ABCD pattern that we were looking at completed perfectly. That was a perfect example. Remember, this is only a 15-minute chart, but it goes over the last 5 days, so it gives you an idea of what's happening. If you're not looking at this microscopically, you're not going to see this on a daily chart, of course, but it made a beautiful ABCD pattern right at the 61% retracement of the December 27th low, and then we also had a 382 retracement of the low from the bottom on December the 25th. Remember the big day that we had on the 26th? That's the day where we had 6.5 to 1 advancing versus declining. Even after we had that 164-point rally in the S&P, it broke 50%, folks. It broke in half. It broke 84 handles all the way down to 24 even. We haven't had that break yet. we've had this 4.5 to 1 rally here. We've exceeded the 61% retracement. We've got all the way up to 25.75, but we haven't had any type of a correction or not. The correction, in our opinion, was going to stop, if it was going to, was around that 25.10 level. We didn't even get close to that. 25.20 was our lowest level. So this market's acting relatively bullish. So let's keep that in mind, because it's still acting, pretty nicely as near as we can tell. So whether it's going to continue or not, we certainly don't know that, but that's what our assumption is. All righty, let's take a look at one other one that we're watching real closely here. That was someone asked the question. Let's cover this right now. When I talked about the fact that you don't want to sell stocks that are up in a market that's down, I brought to your attention Netflix, because you'll look at you see the 2 days there. They've doubled the. You have to delete one of those bars because it's basically the same day, and you have to delete that bar. But you'll see the day before the gap up. That was the day when it was trading at 270 in Netflix, with the Dow down 660 points. There are, I believe, 7 to 1 more declining issues than up issues, and yet you've got a stock that defies all of that and is up about 2.5% on that day with the market down that big. Folks, you don't want to touch stocks like that. The same thing is true, on the upside. If you, on the downside, if you've got everything up and you've got one stock down, you don't want to buy that stock, because somebody knows something. It takes a great deal of effort to get a stock up when the market's down, and it takes a great deal of pressure to keep it down when all stocks are up. So that's a very important thing. That is right out of the book Reminiscences of a Stock Operator by Jesse Livermore, and no one studies it any greater than our good friend David White, POLR in the den, because I think David has memorized that book. But it's a book you should memorize. I believe I've read that book at least 50 times, because when I first started to come back from the 1974 debacle, that was one of the things that one of my mentors told me to read over and over and over again, and I did, and I wore out the darn copy of it. But that's neither here nor there. By the way, this being the Ruby's asking us to take a look at the bonds and the notes. I certainly would. I believe it's easy to look at these here on the long-term charts here, because we had a really interesting rally here in the notes. We got all the way up to a 55% retracement of the high that we made back in September of last year. And now looks like we're getting ready to head lower. One of the things, the bonds look very similar, Ruby, but let me get these up here so you can take a look at it. The bonds have had almost the exact same rally that we had going back in 2017. The number of points is almost identical. But the key to keep in mind here is, if you remember, we've had our friend Bill Meridian, who'll be on this Friday, and one of the things that he was looking at was the possibility of the notes and bonds topping here in late December, early January. And I'll bring this chart to your attention, and I'm sure he'll bring with us some more information again on Friday when he's on with us. But that's what it looks like. I believe we've made some type of a topping action here in the notes and bonds, and they certainly have had a strong rally. I mean, we've had I think it was 8 weeks of basically uninterrupted, no corrections at all. So that's telling us that there's something big going on in this market. But whether it's going to continue or not, of course, we never know that. But you know what else? Nobody else does either, and that's the real thing. I wanted to share with you the day Elvis died, which was August 16th, 1975. One of the few times I never came home from work from Beverly Hills without I was working for Eli Lilly at the time at Cedars-Sinai Medical Center. And when I got to the door, my daughter Jill was there. She was 7, and she was crying and said, "He's dead, he's dead, he's dead." And I said, "Oh my God." who's dead. And then she told me it was Elvis. And I was sad, but I thought there was somebody in the family. Well, he was almost family. Anyway, that was a long, I'll never forget that day. It was very interesting to see. Okay, Tucker's telling us that Amazon is up 24% from its Christmas Eve low. And that's a big, folks, we've had a big rally. And the big rally started really because of the New York Stock Exchange Index making the 62% retracement. But more important than that, in my opinion, is the fact of what the banking index did. And that banking index was absolutely, we should cover this when we get back. I'll post the chart because we're trading substantially above 90 now, and that's a 10% rally off the bottom. But we'll talk about this when we get back for the break, because this is a major move here in this banking index. And it could mean something very, very strong long term. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Wow, we just got a great gift from our good friend David White. I don't know if he posted this into the, let's just get this up here and get this. Hold on one second. Hold on with me, folks. It's something from YouTube, and I wanted to show you. He found the Reminiscence of a Stock Market Operator book on YouTube. And that's a heck of a good thing. Did he already did it? He put it on there. Oh, thank you very much, David. That's right there. If you want to see it, folks, it's it's amazing. But it's a great book, and I highly recommend that book. It's got all the psychological things, and I was fortunate enough back in 1974 when excuse me, it was 1977 when it was a year after I'd started. Well, actually 2 years. I went back to New York with Drexel, and I got to go to the Chrysler Building on the 35th floor and see the old offices that had been made into a museum. They were taken over by an insurance company during the down market of 1978, but it was a really incredible place to really take a look at it. In fact, Mr. Livermore actually took his own life in the Roosevelt Hotel there in New York City. I believe it was 1941. I'm not sure. Well, that was I believe it was 1941, and he left a note. He wasn't bankrupt, folks. People say that he was bankrupt. He had left a lot of his money in trust and some property and stuff. He didn't have any trading capital because he wasn't trading at the time. He was in love with a young woman from New Orleans, and she left him for somebody else, and that was enough to put him over the edge. At least that's what the story goes. And I had some good information on that because Ed Dobson, who studied Livermore's work, and he also knew Jim Smitten, who was a friend of the family, and he wrote a book about Livermore also, and he told me too that they still had quite a bit of money left in the family. Let's talk a little bit. There it was. It was November 28, 1940, pretty close. Yeah, right in. It says Sherry Netherland Hotel. I believe it's a Roosevelt, but maybe they changed the name of it. But we'll be able to see. I saw the. Well, never mind. Let's talk about this. Banking index. That's the one we've got this posted. Let's really look at this, folks, because this really tells you a lot about what the market did. When the market topped, the banking index topped a lot sooner than everything else. We focused on that quite a bit. That was one of the reasons for the bearishness that we had during September and October, and it was getting weaker and weaker and weaker. And then what happened? We're going to see what happens with this banking index, because we went right down to you can see the numbers, you can see them right there, but the key one to look at, from my opinion, is the fact that we touched those old highs from the past years. That was at 80, 79. There was a 79 and change was the low quote there on the 26th, I believe. And we also we made a 38% retracement of the move from 2009. That is very, very important. That is a beautiful chart. Any move below 79 in this is going to cause big problems, in my opinion, and we'll see if that's going to be the case. Now, I see that we're getting very close to the that level we were looking at 20. Yeah, we're right up there now. We did hit it. We didn't quite hit. Yeah, we did. We hit 25.7850. So let's see if that's going to be anything in the S&P. Anything above 25.82, I would say this is no longer, working the way that you'd like to see it. So we'll do one thing at a time as we go through here and look at some of these things. Let's see where we got the euro down at 114.32, and we'll see what's going on. One other question that folks are asking me is about the hold on a second, is about the move in the Canadian dollar, folks. That Canadian dollar has had basically a straight down move from the long-term weekly that we focused on, and I believe, in fact, it's trading a little bit below, where we were yesterday. I'll bring this up and take a look at it. And the question was, if you sold this up here at this 136.60 level, what do you do? And I said, well, with this big wide-ranging move down, it usually is indicative of more to come, especially when you're coming to a 61% retrace on the weekly. Just look at that really wide range down, folks. That was about 300 pips in 1 week, and the only week worse than this is if you go back to November of 2015, and that was, of course, election night. you can see that we had that huge move where we went from 147 all the way down to 141. We dropped 600 pips. This one time we've only dropped 300. And you can see what happened there. It went straight down. It didn't have an update for 2.5 months. So I don't know if the same thing is going to happen, but there's that possibility. So what you got to do is you got to wait and see if this thing is going to continue on in that direction or not. That is for sure. And of course, we'll do one thing at a time. Now, one of the other ones that we're watching is that crude oil market, because we're at some real critical levels in the crude oil up here at 49.60 level. That was right at the 61% retracement on the crude oil. If you'll just check your longer term chart, you'll see, and I'm trying to find it here, and I believe it is here. Yes, hold on here. We'll pull it up here. We went back and we tested it again, and as long as we don't get above 50, this has got a chance to be a top somehow in the crude oil. It's different than what we're seeing with the artificial intelligence, which says we're going to be up all day, but there's the problem that you run into. Sometimes you're looking at chocolate cake, and sometimes you're looking at strawberry cake. You have to decide which kind of cake you like and which time frame you're going to enjoy. So that's what we're looking at here this morning. The U.S. dollar. The U.S. dollar is in a very, very critical level. If we look at this on the long-term weekly level, hold on one second, and I'll get it up here. You'll be able to see that that level of 97 and change, we never did get to 98. We got to 97.72, and we couldn't get above that. We're trading, below 96 right now. So there's a possibility that we made a 61% retracement on the long-term weekly chart in the euro. Now, this would affect the gold market. It would also affect the silver market and most other things. But this is just a 2 or 3 day phenomenon right now. You don't know what's going to happen. We've had a good rally here in the euro. We've gone from 113 and change all the way up to 114.70, and now we're trading at 114.28 or something like that. So it's right in that area where it could go either way. And what you're trying to do with pattern recognition is to find a spot where you don't have to risk very much to see if that's going to happen. And that's the whole key to this. It's not about how much money you make. It's about how much money you don't lose, and that's the real key to do this as you do your trading each and every day. And I certainly don't recommend looking at the monitor. That monitor is no friend of yours at all. There's nothing else that you can possibly do to hurt your trading than to stare at that monitor all day long, especially if it's something that you're in, because you're focusing on the dollars, you're not focusing on the pattern. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I wanted to bring to your attention here the chart of Netflix, and just to give you an example of what we were talking about. You'll notice that little red box that I put there. That's the day that the Dow was down 660 points, and you notice that Netflix was up on the day. Folks, it's up 27% in 3 days, including today. So this is a perfect example of what I mentioned to you, is if you got a stock that is up in a really, really bad market, you don't want to short that stock. And if a stock is down in a really, really good market, you don't want to buy that stock. In 1987, when we had the big crash, we had 1,600 and some issues on the New York Stock Exchange. As I recall from memory, and I had this in file somewhere, but I've lost it, I believe there were 13 issues up that day. Stop and think of it. It was the worst crash since 1929. And we had only 13 issues up, and I followed those issues for a while afterwards. If you can't get a stock down when the world is coming apart, I mean, somebody knows something. I mean, that's basically it. So remember that. It's a very, very important thing. It also is related to when you get really, really good news and the market doesn't go up. It only has one way to go. When the only way up is up, the only way down is down. In other words, you get to a point where all the bullish news is out, it is over. So remember, the way the market reacts to these news events, positive and negative, is extremely important. Reminiscences of a stock operator, Livermore talked about that, quite a bit at length. And also, that was the work of Charles Mackey, on the popular delusion and the madness of crowds. The same thing is, he gets really, really bullish. We've seen this in Bitcoin, for heaven's sakes. I mean, look what happened to Bitcoin from 19,500 down to 3,200. So that happens. And of course, it went from 6 cents to 19,500. So we'll have to wait and see how that thing ends up. But we'll watch it one thing at a time. There's one future that we talked about this just the other day, and that is the corn market. I believe we've got a pretty good chance of this corn to have a tremendous move. We've had that's very good, Dave. Boy, David, I'll tell you, David, you're like a little Google man or an encyclopedia for us here. God, do we appreciate this? I certainly do. But he posts the quote here from Charles Mackey's book. Men, it has been well said, think in herds. It will be seen that they go mad in herds when they only recover their senses slowly, one by one. And that's absolutely true. Let's look at this corn chart. We had the right around Thanksgiving. We had the head and shoulders pattern form, beautiful Gartley pattern, exactly 61% retracement. We had a really nice move of about 14 cents in that. Then it backed off to just about the 78% level here on Christmas, and now it looks like we're trading at 383 today, and it's starting to move a little bit higher. And if we get any positive news out of China on trade, I really believe you get these grain markets could really start to move, very, very substantially to the upside. We've seen that same head and shoulders pattern, of course, in the I'm reviewing these because people are asking me here to review these, but you'll see the head and shoulders pattern that we had in the soybean meal, and that also was a big move. You're right, Bob. The same thing with the soybeans. They're all coming together, and we'll see if that's going to be the case. But these markets have been acting all along like something has already been done that we don't know about. So there'll be something that you have to pay attention to. Back in 1982, when I was first on the floor of the exchange, there was a broker there that did a lot of filling in the meats. His name was Harry Lawrence. His nickname was Harry the Hat, because he always wore these real expensive hats made in Italy and all other places, but he had real expensive hats. But Harry actually did some trading for Earl Butz, who was our Secretary of Agriculture at the time. And when Harry was in the pit buying right before a crop report, you might as well buy it because he was buying for Earl Butz. This was back in the days when there was corruption in Washington. Of course, we don't have that anymore, but that was happening back in the old days because that was really a no-brainer. When you saw Harry in the pit, either buying or selling, you had a pretty good idea what that crop was going to look like. And it was really, I happen to be a good friend of Harry's brother, Ricky Lawrence. He was the best order filler on the floor of the Merc. He was legendary. He could, he had a photographic memory. It was just really, really something to take to bring back memories anyway. All right, we have a question about one of the other currencies that we've been watching, and that is the Japanese yen. You remember? Yep, we'll watch Psy. That's right. We keep an eye on Psy right now, but unfortunately, Psy keeps a very, very close vest, and we'll be watching that. A lot of news about Psy, but I'll let him tell you someday when we have him back on the news. He's been very, very fortunate, and he's a super guy. But if we take a look at this Japanese yen on a weekly chart here, you notice we had all those 61% retracements up there at that 115 area, telling you that it was massive supply. And then, of course, on the 20, I believe it was the 28th of whatever, I think it was the 28th or 29th, we had the big down move that stopped exactly at the 61% retracement that we had in 2018, and we're trading right pretty much at this same level. We're still at this 108.40, so we haven't even had any type of a correction now after that big drop. That tells you that bottom is flat out very, very important. So we'll have to see what's going on. Well, we'll watch it anyway. Let's take a quick look at what the market's doing. We're going to open about 12 minutes, and we'll see if we've held that 80 level. Yeah, we did. We got up to 81. That was right within a point of what our maximum level was, and now we're trading at 25.71. So maybe we do have a down day coming in the market today, but we'll have to wait and see. I noticed that Netflix just went from positive to negative on the day, so I had that beeper set because I wanted to see how it reacted to the opening price, because the opening price in these stocks is very important. That's why we call that first hour amateur hour, because these computer programs and stuff many times act in the first 20 or 30 minutes, and then after 45 minutes, the battle is over, and then the war begins, and you find out which direction the market really wants to go. But any move above that 25.82 level now would certainly be very, very important. We were looking at a high of 25.78, and we got to 25.81. That's 3 points, so you don't have to risk much here if this is the way it's going to unfold for the day. And oh my gosh, here we are on Elvis's birthday. We're coming up to our final break on the day. I want everybody to go out and have some Elvis cake today. which is peanut butter and banana cake. You'll absolutely love it. There's nothing like it. One of my biggest disappointments when I went to Memphis to see Graceland was how small the place really was. It was built on a monster hill, well, a nice hill, big estate, but the building itself was very small. I think it's only like 3,500 or 4,000 square feet with very small rooms, and I was really expecting something of the California variety, but it's quite small. Still spectacular, but small. 877-927-6648.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Fletch is telling us that the house that Elvis bought in 1956, I believe, Graceland, was a total mansion compared to where he was born in Tupelo. I actually went to Tupelo, Mississippi, and saw that place. I used to hang out in Vicksburg, Mississippi, quite a bit. My good buddy Jay Crosp, who had worked for Commodity Corp and Amos Hofstadter all those years, was my best friend, and we really spent a lot of time down in Vicksburg because he had a bed and breakfast there that he really enjoyed. anyway, Tupelo was it was a really small house. It was like one bedroom. They didn't even have a bathroom. It had an outhouse. So that goes back to the old days. Anyway, let's move on here and talk a little bit about, I posted in the room here what I think the forecast will be. We should come down to around 11:45, and then we'll see if it's going to rally or not. But remember, this is just it's just probabilities, folks. It's nothing more than looking at markets and determining where their possibilities they could be in the future. And whenever you look at the future, you're always looking at something that is never 100%. If you get anywhere near 50%, you're pretty lucky. So let's keep in mind that that's what we're watching here at TFNN. You're the one that has to take the responsibility for these things. I think it's very, very important. Remember the long-term pattern on this E-mini S&P. If we're correct, he comes in right at the level of 2640, which is about 70 handles from where we're trading right now. So we haven't had much of a correction yet. So watch the correction. Remember the last big correction we had during this whole move since the 26th, we had an 80-point correction on the 27th. We had an 80-point correction on the 3rd and 4th. So we could get an 80-point correction here, and it's still bullish. So keep in mind that we're having great volatility here. So let's watch it. It's very, very important. Yes, Mr. Z, I think that coffee has bottomed. We've had a really strong bottom off the rally off there, so we'll see. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!